So in this video, I'll show you how you can practice proper risk management by predetermining the position size before you enter into a trade. Whatever account size you have, let's say you want to risk 1%, you want to risk 0.5%, or a very specific amount of money that you are comfortable with, you can only do that by predetermining the proper lot size before you even get into the trade. For example, here I have a $25,000 balance account. Let's say I only wanted to risk 0.65% of the $25,000. That simply means I want to risk about $162 per trade. So when I get an opportunity in the market and I want to buy, for example, like here I have Euro USD, which I've just taken a buy trade, but this is all for the purposes of explaining this example. This is not my live trading. So this is the buying price and I have set my stop loss somewhere down here. So I want to predetermine my risk in a way that when I lose this trade, I should only lose 0.65% of my account, which in monetary value is $162. Currently, this is my stop loss. And if I point at my stop loss, you'll see the amount of money being expected to be lost is $162. So what lot size do you use to make sure you only lose the exact amount of money that you're comfortable with? The advantage of this risk management practice is it allows you to be ready mentally for the loss because you already know what your account balance is. Then you do the math of the percentage you're comfortable to risk for every trade. And this allows you to have better trade management. And just for clarity, the lot sizes you use vary across different pairs. The lot size that will risk 1% on Euro USD with a 20 pip stop loss, if you use the same lot size, let's say on AUDJPY with the same stop loss, might not risk 1%. It might risk slightly more or slightly less. And that's because different currency pairs have different pip values. That means 1 pip on Euro USD does not equal to the same amount as 1 pip on AUDJPY. The first thing that you need is knowing the specific currency pair that you are trading, of course. Then the second most important thing is knowing your account balance and the exact amount of money you want to lose. You can either look at it from the money that you're willing to lose, or you can convert it to a percentage. For instance, instead of maybe saying I want to lose $200 from a $10,000 account, you can just say I want to lose 2%. Then finally, you need to know the specific stop loss that you use in terms of pips. For example, do you use a 10 pip stop loss, a 15 pip stop loss? Because the risk that you're going to use on the trade in terms of the lot size will be very specific to these details. Right now, we are on Euro USD currency pair. Let's assume I want to take a sell position and I intend to have a stop loss of 20 pips on this trade that I want to take. But the question is, how do I ensure that in case I lose on that trade, I only lose, let's say, my account balance is currently $25,000 on this demo account. So let's say I want to lose exactly 1.25% of my account. So I'll go and look for something called a lot size calculator, which can be found on the internet. We have different versions of them. I mostly use this called the cashback Forex. Not because it's any special, but it's just because I think I'm more accustomed to this interface for some reason. First thing you will fill in is the currency pair, which is Euro USD. The second thing you will fill in is the stop loss that you're using. So you say you're using a 20 pip stop loss, so you edit it to 20 pips. Change the account balance to 25,000, which is currently the demo balance we are using. Then the risk that we want to use in terms of percentage. So we want to risk 1.25% of our account. Then you come and calculate. Now, once I press the calculate, just pay attention, you will see the lot size being reflected here. So when we calculate, the lot size we need to use is exactly 1.563. And the money we are expecting to lose is $312. Just to confirm that, you can come and check. We said we want to risk 1.25% of the account. So 1.25% times 25,000. Our stop loss should lose exactly $312. So the calculator is telling us the same thing, that our 1.25%, the money at risk is exactly US dollars 312.5. So now I can go on my platform and sell Euro USD. Remember I told you I wanted to sell the currency pair with a 20 pip stop loss. So now I know that I need to use a lot size of 1.563. So we press the new order, and then I'm gonna press the sell button. Perfect. So when you press the button, the MT4 sometimes or MT5 will round off the figure. So you see it sounded it to 1.56 even though we placed 1.563. So anyway, we have a short position. We want to use a 20 pip stop loss. So if you want to get the accurate details of your stop loss, I always recommend using the trading view so that you can fill in the exact data. We're going to take the short position and place it somewhere there. Next thing, we confirm the exact parameters of our entry price. So I took a sell position. This is the current price. The price on the price at which I took the sell position is 1.06744. Come and edit here, 1.06744. So that's our entry price. Now I want to use a stop loss of 20 pips. So you can just come and adjust here and try to get the 20 pip mark. As you can see, the pips are here. But for me, I like to be very precise. Sometimes when you adjust, you can end up getting 20.6, 19. So you see, it's very difficult to get the exact mark of 20. Just come and double click. Then you edit manually. You edit at the stop loss level. It's written in ticks, and ticks is simply pips multiplied by 10. So in short, anytime you see ticks and you want to get the pips, you just divide by 10. So that means if our stop loss is supposed to be 20 pips, if you are filling it in ticks, it's just going to be 20 times 10, which is 200 ticks. So 200 ticks will give you the same thing as 20 pips. So now if you check, my stop loss is exactly 20.0 pips with no fluctuation in the decimal point. Now I can go back and adjust the same stop loss on my trade, which is 1.06944. Come and modify the position, move at the stop loss level, 1.06944. That's our stop loss. There it is, we have the stop loss updated. Right now, what I'm expecting is, in the case this market does not sell and it goes opposite, I should lose 1.25% of my account, which in monetary value is about $312. We can confirm that by just pointing at our stop loss right now. So currently my stop loss, there it is, exactly $312. That's how you predetermine the exact amount of money you want to risk per trade. Once you know what you're willing to lose, this is where the risk to reward factor comes in. So I'm willing to lose 20 pips. I can decide that I want to have a risk to reward of 1:3 or 1:4. So let's go with the risk to reward of 1:3. It simply means whatever I have risked, I want to make 3 times. So if my risk on this trade is $312, I want to make roughly 312 times 3, which would give me a profit of about $936. So how do you do that? You simply go back to the chart. Your stop loss is 20 pips. For you to make 3 times whatever your stop loss is, you need to make your stop loss, you need to multiply your stop loss by 3, which will give us 600 points. So come to the profit level and edit that to 600. 600 points or 600 ticks is the same thing as 60 pips, because you just divide by 10. So there we have our profit level is exactly 1.06144. And at that profit level, we should have a reward ratio of 3, simply meaning we make 3 times whatever we are risking. So you now go and edit the take profit on your running trade, which is 1.06144. Come and then modify the position, take profit 1.06144. Think that was the exact value. So we're expecting to make about $936 if we target the ratio of 3. Let's point out our profit and see. Yeah, that's it. Our expected profit is $936. Now, another way to look at it is if you go to the lot size calculator and you don't want to use the percentage, you can come and change from the percentage to the USD. This simply means you'll now input the exact amount of money you want to risk. Remember, we wanted to risk 1.25, which equals $312.5. So if you have that exact amount of money in your head, you can just come and put USD, and in this case, you'll now put the exact amount of money you want to lose. If you calculate, it will give you the same thing, which is 1.563, and it will tell you that that amount of money, according to your account balance, is 1.25%. So this is how you can determine the exact percentage or amount of money you want to lose per trade. And keep in mind, the most important thing here is the lot size, because after you've filled in all these details and you calculate, what you're looking for is the lot size, and then you go and use that lot size to open the trade. Now, obviously, I was just showing you an example, so I know it seems a little bit complicated because you're wondering, how do you open a trade? You go back to the trading view, you adjust the stop loss. It looks very complicated. So it's just because this is an example. But in most cases, what happens is that you always anticipate a setup before it happens. So, you won't just wake up and go to the market and say you want to sell Euro USD right now. You'll be anticipating the setup for a while. This has been a manual approach. I'm saying that because we do have automated approaches, which are mostly softwares. There are softwares which I've seen on YouTube that you can either buy or some of them you can subscribe maybe on a monthly basis. Then when you go to your trading platform, maybe the software you'll just you'll find it written some percentages, so you can just click the exact percentage and it will do the calculation for you. In case you want to go that route, you can do more research on that. I haven't used them myself, but this is what I use normally because first, I don't trade many currency pairs. Second, it's very easy for me to know the lot sizes of my currency pairs because I don't keep on changing my risk. For instance, let's say I use 0.5% risk, you can find I've used that for maybe even 2 or 3 weeks. So if I'm using a specific lot size, it always remains the same for a very long time. So for me, there is no need for paying for software to do it every time because I'm not constantly changing my lot sizes. So for those of you who are trading prop firms, whatever account balance you're trading, I just get the question of, how do I make sure I don't lose more than the 5% per day? This can help you so much because prop firms have given you limitations of, in a day you can't lose more than 4 or 5%. So for you to make sure you're not losing more than 4 or 5%, you can predetermine that for every trade I'm using a specific percentage, right? And that brings me to the end of this video, guys. So you can subscribe to my YouTube channel if this video helped you.